Expert predictions, forecasting the economic landscape of e-commerce. Overview. In a rapidly evolving economic landscape, e-commerce has emerged as a critical driver of retail growth, particularly in the aftermath of the COVID-19 pandemic. Recent forecasts by economists indicate a robust outlook for the sector, with 70% predicting a 15% growth in e-commerce by the fourth quarter of 2027. This anticipated growth is largely attributed to the implementation of new policies aimed at enhancing digital commerce, shifting consumer behaviors, and technological advancements. Current e-commerce landscape. The COVID-19 pandemic has dramatically accelerated e-commerce growth, propelling online sales far beyond previous projections. According to data from the U.S. Census Bureau, retail e-commerce sales surged from $571.2 billion in 2019 to $815.4 billion in 2020, marking a staggering 43% increase year over year. As of 2024, e-commerce is expected to account for 21% of total retail sales, a significant rise from 16% in 2021. And the U.S. e-commerce market is projected to reach $1.3 trillion by 2024, reflecting a 110% growth from pre-pandemic levels. Key trends driving e-commerce growth. 1. Shifts in consumer behavior. The pandemic has fundamentally altered shopping habits. In 2024, 42% of U.S. respondents indicated they plan to spend more online, driven by the convenience of digital transactions and the growing popularity of contactless payment options. 2. Global e-commerce expansion. The international e-commerce market is set for substantial growth, with B2C e-commerce expected to reach $9 trillion by 2032. Latin America in particular is projected to experience a 22% increase in e-commerce sales from 2023 to 2026, fueled by a burgeoning middle class and rising disposable incomes. 3. Technological integration. Innovations, particularly in artificial intelligence (AI), are enhancing operational efficiencies within supply chains and improving customer engagement. Retailers are increasingly leveraging AI to optimize workforce management, logistics, and customer service. 4. Sustainability trends. A growing segment of consumers, especially younger demographics, prioritize sustainability in their purchasing decisions. Brands that adopt eco-friendly practices may benefit from increased customer loyalty and sales. Challenges on the horizon. Despite the optimistic growth forecast, several challenges could impact the e-commerce landscape. Inflation concerns. A significant portion of consumers, approximately 57%, express anxiety about rising prices. This could prompt retailers to adjust pricing strategies, potentially influencing consumer spending behavior. Supply chain disruptions. Ongoing supply chain issues pose a substantial hurdle, prompting businesses to invest in regionalization and diversification strategies to mitigate risks. Timeline of key events. 2020, e-commerce sales experienced a meteoric rise due to the pandemic, particularly in sectors like online grocery shopping. 2021 to 2022, the trend toward digital shopping persisted, with brands adapting to consumer demands for convenience and rapid delivery. 2023, there was remarkable growth in mobile commerce and social commerce, with more consumers using these platforms for online purchases. 2024 to 2027, economists expect continued growth driven by supportive policies and technological advancements, with e-commerce projected to capture an even larger share of total retail sales. Conclusion. The e-commerce landscape is undergoing a transformative evolution, influenced by changes in consumer behavior, technological advancements, and external economic factors. As businesses adapt to these shifts, a focus on enhancing customer experience and optimizing operations will be vital for sustaining growth in the digital marketplace. With the majority of economists forecasting a significant increase in e-commerce activity, the future appears promising for the digital retail sector. In summary, the implementation of new policies, technological integration, and evolving consumer preferences are anticipated to collectively contribute to a thriving e-commerce sector. marking a pivotal shift in the retail landscape in the coming years. Counterintuitive information. 1. Increased online spending amid economic concerns. While 57% of consumers are worried about rising inflation, 70% of economists predict a 15% growth in e-commerce, suggesting that despite economic concerns, consumers are willing to spend more online, highlighting a paradox where fear of economic downturn does not translate to reduced consumption. 2. Consumer loyalty decline. The expectation that consumers will remain loyal to brands during economic uncertainty is contradicted by data showing that over 70% of consumers have switched to competitors in the past year. This indicates that consumers are more price sensitive and willing to abandon their preferred brands for better deals, which challenges traditional notions of brand loyalty during tough economic times. 3. Growth of mobile commerce versus in-person shopping. Despite the strong growth of mobile commerce which surged during the pandemic, in-person shopping has not disappeared entirely. Consumers are still engaging significantly in brick-and-mortar shopping, indicating that the expectation that e-commerce would entirely replace physical shopping may be overly simplistic. For sustainability, demand versus cost concerns. While there is a growing demand for sustainable practices among younger consumers, 57% of consumers are worried about inflation. This creates a tension where consumers want eco-friendly options but may prioritize cost over sustainability in their purchasing decisions during economic strife. 5. Diminished expectations for e-commerce growth post-pandemic. After the initial surge in e-commerce due to the pandemic, expectations for sustained high growth rates have tempered, with projections for growth rates declining back to pre-pandemic levels. This suggests a readjustment of consumer behavior rather than a permanent shift to e-commerce dominance. 6. Contradictory growth rates. The projected increase in global e-commerce sales to $9 trillion by 2032 contrasts sharply with the expectation that brick-and-mortar sales will only see weak growth. This suggests that while e-commerce is thriving, the retail environment is still complex and physical stores are not entirely obsolete, contrary to some predictions. 7. Technological investment versus economic uncertainty. While 41% of retailers plan to enhance workforce management with AI, a majority also express concerns about economic conditions impacting their operations. This highlights a dissonance where businesses are investing in advanced technologies during a time of economic uncertainty. 8. Consumer behavior and purchase decisions. Despite the expectation that consumers would revert to pre-pandemic shopping habits, data suggests that many are continuing to shop online. This indicates that the pandemic has permanently altered consumer behavior in ways that were not initially anticipated. 9. B2B versus B2C trends. The rapid growth of B2C e-commerce contrasts with more muted expectations for B2B sales growth, suggesting that the traditional B2B market may not recover as quickly as consumer markets, which is counter to the expectation that business markets would also rebound strongly. 10. Rising costs leading to consumer adaptability. As shipping rates have increased significantly, consumers are adapting by shifting their purchasing strategies. This adaptability contradicts the idea that rising costs will lead to decreased spending, instead showing that consumers are finding new ways to shop in response to economic pressures. These points illustrate the complexities of the current economic landscape and consumer behavior, highlighting that trends in e-commerce do not always align with traditional economic theories or consumer expectations. Important content that could be overlooked in the e-commerce growth report. 1. Consumer behavior insights. Many people may focus on the projected growth percentages in e-commerce but overlook the underlying shifts in consumer behavior that drive this growth. The report notes that 42% of U.S. respondents plan to spend more online in 2024 compared to previous years. This insight is significant because it indicates a fundamental shift in consumer preferences towards online shopping driven by convenience and changing lifestyles. Significance. Understanding consumer behavior is essential for businesses to tailor their marketing strategies. Companies that leverage this data can better align their offerings with consumer expectations, potentially capturing more market share. 2. Global growth trends. The report highlights that Latin America is projected to see a 22% growth in e-commerce sales from 2023 to 2026. While many may focus on traditional markets like the US and Europe, the rapid growth in regions like Latin America can be overlooked. Significance: for businesses looking to expand these emerging markets present vast opportunities. Companies that enter these markets early can establish a foothold and gain competitive advantages over those that wait. 3. Technological integration. The report emphasizes advancements in technology, particularly AI, to enhance supply chain efficiency and customer engagement. This detail might not seem as critical at first glance, but the ability of AI to optimize logistics and workforce management could fundamentally alter how businesses operate. Significance: companies that invest in technology can improve operational efficiency, reduce costs, and enhance customer satisfaction, leading to sustained growth in a competitive market. 4. Sustainability trends. There is a growing demand for sustainability, particularly among younger consumers. Brands that incorporate eco-friendly practices may see increased loyalty and sales. This point might not get the attention it deserves in the context of growth forecasts. Significance: as consumers become more environmentally conscious, brands that prioritize sustainable practices may not only attract more customers but also differentiate themselves in a crowded market, potentially leading to long-term loyalty and success. 5. Challenges and inflation. The report mentions that 57% of consumers are worried about rising prices due to inflation. Yet this insight may not resonate with everyone focusing solely on growth statistics. The potential impact of inflation on consumer spending is a critical factor that could shape the future of e-commerce. Significance: businesses must prepare for potential changes in consumer behavior due to inflation. Understanding this dynamic can help companies adjust their pricing strategies, marketing, and product offerings accordingly. 6. Mobile commerce growth. There is a notable trend toward mobile commerce with significant growth expected. The report indicates that mobile retail sales surged by 31.5% in 2020 and are projected to continue rising. Significance: companies that optimize their e-commerce platforms for mobile can capture a larger share of the market, as more consumers prefer shopping via their smartphones. 7. Regionalization of supply chains. The report discusses how businesses are investing in regionalization and diversification of suppliers to mitigate risks from supply chain disruptions. This trend may not be immediately evident when focusing on sales growth. Significance: companies that adapt their supply chain strategies to be more localized can enhance resilience against global disruptions, ensuring they can meet consumer demand even in challenging times. 8. Impact of social commerce. The report notes that social commerce is poised for significant growth, projected to reach $1.2 trillion by 2025. This detail may be overlooked by those primarily focused on traditional e-commerce sales. Significance: as social media platforms increasingly integrate shopping features, businesses that leverage social commerce can tap into new consumer segments and enhance their marketing strategies to reach customers where they spend their time. 9. Changes in advertising spend. The report indicates that many brands are reallocating their advertising budgets toward digital platforms due to the pandemic's accelerated shift to online shopping. Significance: understanding shifts in advertising spend can help businesses optimize their marketing strategies and ensure they are effectively reaching their target audiences in a changing landscape. 10. Consumer trust and brand loyalty. The report suggests that cultivating trust with consumers is essential, especially as 70% of consumers have purchased from competitors. This point about consumer loyalty might not seem as significant when discussing growth percentages. Significance: brands that focus on building strong relationships with their customers through transparency and quality service can foster loyalty that translates into repeat business and referrals, essential for long-term success. Conclusion. In summary, While the growth statistics and forecasts for the e-commerce sector are impressive, it is crucial to delve deeper into the underlying trends, consumer behaviors, and potential challenges that accompany this growth. By understanding these nuances, businesses can better position themselves to adapt and thrive in the evolving e-commerce landscape. Here are the four most valuable points from the content related to the forecasted economic landscape for e-commerce, particularly focusing on the predictions of a 15% growth by Q4 2027. 1. Consumer behavior changes. The COVID-19 pandemic has significantly altered consumer shopping habits with a substantial shift towards e-commerce. A reported 42% of U.S. respondents plan to increase their online spending in 2024, highlighting a long-term preference for the convenience of digital shopping. This behavioral change is not merely a temporary reaction to the pandemic but is expected to persist. Driven by factors such as the growing acceptance of digital payment methods and the ease of online shopping. Brands that adapt to these preferences by enhancing their online presence and offering seamless digital experiences are likely to thrive. 2. Technological integration and advancements. The anticipated growth in e-commerce is also linked to advancements in technology, particularly artificial intelligence (AI) and automation. Retailers are increasingly leveraging AI to enhance supply chain efficiency, improve customer engagement, and optimize logistics. As AI technologies become more integrated into e-commerce operations, retailers can expect to reduce operational costs and improve service delivery, which will be essential for sustaining growth amid heightened consumer expectations for speed and efficiency. 3. Global e-commerce expansion. The global landscape for e-commerce is projected to expand significantly, with B2C e-commerce expected to reach $9 trillion by 2032. Regions such as Latin America are predicted to see growth rates of 22% between 2023 and 2026. Fueled by an expanding middle class and increased disposable income. Companies looking to capitalize on this growth must consider international market entry strategies, including localization and adaptability to regional consumer preferences, which will be critical for success in diverse global markets. 4. Sustainability and ethical practices. There is a growing demand for sustainable and ethically produced products, particularly among younger consumers. Brands that incorporate eco-friendly practices into their operations may benefit from increased consumer loyalty and sales. The trend toward sustainability is expected to influence purchasing decisions significantly, suggesting that businesses that prioritize environmental responsibility will not only meet consumer expectations but also differentiate themselves in a competitive marketplace. These points provide a solid foundation for further in-depth analysis and discussion on the future of the e-commerce landscape. Addressing the key drivers of growth and the emerging challenges retailers will face in adapting to a rapidly changing environment. 1. The dot-com bubble 1997 to 2001. The late 1990s saw a surge in internet-based companies, leading to a speculative bubble in the stock market. Analysts and investors were overly optimistic about the potential of e-commerce, with many companies receiving massive valuations despite lacking traditional business models or profitability. The bubble burst in 2000, leading to significant financial losses and the collapse of many e-commerce companies. The aftermath led to a more cautious approach to tech investments and a focus on sustainable business practices. 2. The Great Recession 2007 to 2009. The financial crisis that began in 2007 had a profound impact on consumer behavior and the economy. As unemployment rose and consumer confidence plummeted, many businesses struggled. However, the recession also accelerated the growth of e-commerce as consumers sought more affordable options online. Companies like Amazon and eBay thrived during this period as consumers increasingly turned to online shopping for better deals. The recession reshaped retail, leading to the closure of many brick-and-mortar stores and a shift toward digital sales. 3. The COVID-19 pandemic 2020-present. The global outbreak of the coronavirus significantly accelerated the shift towards e-commerce as lockdowns and social distancing measures forced consumers to shop online. Retailers that had invested in e-commerce infrastructure prior to the pandemic were better positioned to adapt, while many traditional retailers faced challenges. The pandemic led to a surge in online grocery shopping, home delivery services, and digital payment solutions. Economists predict that these changes will have lasting impacts on consumer behavior and the overall retail landscape, with e-commerce continuing to grow even post-pandemic. Future outlook, predictions for the economic landscape of e-commerce. The e-commerce industry is expected to undergo significant transformations over the next few years, particularly as we approach the fourth quarter of 2027. According to insights drawn from leading economists, a substantial 70% predict a remarkable 15% growth in e-commerce, driven largely by the implementation of innovative policies aimed at stimulating digital commerce. This analysis delves into key trends, challenges, and opportunities that are set to shape the e-commerce landscape in the coming years. Economic growth and e-commerce expansion. 1. Projected market growth. The global e-commerce market is projected to reach approximately $9 trillion by 2032, with substantial contributions from regions such as Latin America and the Asia-Pacific. Latin America alone is expected to see a 22% growth in online retail sales from 2023 to 2026, fueled by a growing middle class and increased disposable incomes. 2. Consumer behavior trends. Post-pandemic consumer behaviors have shifted dramatically. A notable 42% of U.S. respondents indicated a desire to spend more online in 2024 as convenience and digital payment options have become pivotal in the shopping experience. This trend reflects an ongoing preference for online shopping, which is likely to persist even as traditional retail begins to stabilize. 3. Technological integration. The integration of technologies such as artificial intelligence, AI, and machine learning will play a crucial role in enhancing supply chain efficiency and customer engagement. Retailers are increasingly adopting AI to optimize logistics, manage inventory, and personalize shopping experiences, which can lead to higher conversion rates and customer satisfaction. 4. Sustainability focus. As awareness of environmental issues grows, consumers, particularly younger generations, are gravitating towards brands that prioritize sustainability. E-commerce companies that adopt eco-friendly practices may benefit from increased customer loyalty and sales as sustainability becomes a key differentiator in the market. Challenges on the horizon. Despite the optimistic outlook, several challenges could impact e-commerce growth. 1. Inflationary pressures. Rising inflation rates are a significant concern for consumers, with 57% expressing worries about increasing prices. This could lead to altered spending behaviors, with customers becoming more price-sensitive and potentially reducing discretionary spending. 2. Supply chain disruptions. Ongoing supply chain issues exacerbated by global events like the pandemic and geopolitical tensions remain a critical hurdle for e-commerce businesses. Firms are investing in regionalization and diversification of suppliers to mitigate risks and enhance resilience. 3. Marketplace competition. As e-commerce continues to thrive, competition among major players like Amazon, Walmart, and emerging platforms will intensify. Retailers must adopt innovative strategies to capture market share and differentiate themselves from competitors. Strategic recommendations for future success. To navigate the evolving e-commerce landscape effectively, businesses should consider the following strategies. 1. Embrace omnichannel retailing. Companies should create seamless shopping experiences across digital and physical channels. Integrating online and offline touchpoints can enhance customer engagement and drive sales. 2. Leverage data analytics. Data-driven insights can inform marketing strategies, product offerings, and customer engagement initiatives. Businesses should invest in analytics tools to understand consumer behavior and optimize their operations accordingly. 3. Focus on customer experience. Improving the customer journey is essential. Retailers must prioritize user-friendly interfaces, responsive customer service, and personalized shopping experiences to retain and attract customers. 4. Invest in technology and innovation. Continuous investment in technology, particularly AI and automation, can enhance operational efficiency, reduce costs, and improve customer experiences. Companies should stay ahead of technological trends that could influence their business models. 5. Adopt sustainable practices. As consumers become more environmentally conscious, adopting sustainable practices can differentiate brands and enhance loyalty. Implementing eco-friendly packaging, reducing carbon footprints, and supporting ethical sourcing can resonate with socially aware consumers. Conclusion: the future of e-commerce appears bright, with predictions of significant growth and expansion. However, businesses must remain agile and responsive to the challenges and opportunities that lie ahead. By focusing on technological integration, customer experience, and sustainability, e-commerce companies can position themselves for success in a rapidly changing economic landscape. As we approach the fourth quarter of 2027, those who adapt to these trends will likely emerge as leaders in the digital marketplace.